Now.
Okay, just confirming we have a quorum present?
Yes.
Great, thank you. Good morning, everyone. I'd like to call the meeting to order. Our first item is to review the minutes of our June 9th meeting. If anyone has any questions, we can discuss those. Otherwise, I would entertain a motion to approve the minutes from the June 9th, 2020.
Joining the meeting.
Dave Brooks. Welcome, Dave. We're just getting started. We're just reviewing the minutes, and I'm requesting a motion to approve the minutes.
I'll move that. Bill Smith.
Thank you, Phil.
Second, Bill Rizzo.
Thank you, Joe. All in favor?
Aye.
Aye.
Any opposed? We'll move on to the labor monitoring report, and Kevin is not with us today, but if anyone has any questions, we can discuss. The only question I had, the item number 5 there, where we have a couple of non-compliant workers. I don't know what happened there, because the next item says all monitored sites are in compliance.
So this is Robin. So what Kevin does when he goes on a project site and finds, usually he's checking IDs, driver's license, and if someone forgot their wallet or something, he does go back the next day and rechecks. So I believe what he's saying is that he went on one day and then the next day he went back and everyone was in compliance.
Very good. Any other questions? If not, good morning, Greg. I'm going to turn it over to Greg to review our finances as of today.
Okay, thanks, Peter. Again, through 6 months, I think you can see everything's really holding up to our recasted plan. Obviously we had anticipated, a reduction of our cash based on the emergency loan program. So, you can see our balance down about a little over $1.3 million. And again, most of that has to do with the $1 million from the program, plus running a little bit of a deficit in our normal operations. In terms of, the revolving loan fund, all balances, we track every account. All balances, I believe, all accounts have been paid each month. So that's a good sign in terms of our existing loan balances. And then, as you can see, the emergency loan balance is there. The plan for that is to, we're establishing a process to track all those loans when they become, when they start to, get paid on, I believe, at the beginning of next year. Robin and the team are, we're establishing a process with respect to what that's going to look like if there's non-compliance and things like that. So we will be tracking each of those balances individually, and we have set those up currently. Everything else is, again, in terms of the balances, payables, and liabilities, really just represent timing differences and things like that. So all in all, our assets and liabilities are holding, to our recasted plan. If you look down at the bottom, our statement of activities, in terms of revenue, again, we're pretty much right in line with what we budgeted, where we were last year in terms of revenue. Where we made some significant adjustments is in our economic development. We have mainly eliminated all of the programs that weren't absolutely necessary, and that was agreed upon by the board. So, as you can see here, our total expenses through 6 months are approximately $460,000, and that's about $140,000 less than they were last year at this time, and almost $300,000 to $280,000 less than what we had budgeted. So again, just shifting priorities from that aspect. So again, through 6 months, happy to report that again, everything is going, to our, what I would say our recasted budget plan was after COVID, after the emergency loan fund was established. And that's all I have for financials. Any questions? All set here. Thank you. Thanks.
Well, again, congratulations to staff on the emergency loan fund getting the money out, and congratulations on getting it all loaded so Greg can track it. Thank you, Greg. The next item, Rachel, if you're there, this is a large bond for the University of Rochester. We approved. Is that pre-COVID? I think it may have been. Rachel, if you want to walk us through current status here.
Sure. So the transaction is scheduled to close at the first week of August. As we have worked through the transaction and COVID has impacted the university and its medical center, one item that was added to the project that did not impact the overall dollar amount, but impacted the project as we described it in our resolution, was that the university intends to use approximately $25 million from a taxable series of bonds that MCIDC will issue for working capital and general operating purposes of the university. It will not be used for any new construction not otherwise contemplated by the project. And so we wanted to, out of an abundance of caution and belt and suspenders, frankly, do an amended bond resolution to include the funding of capital and operating purposes of the university of that $25 million, again, out of the taxable series of bonds, not the tax exempt series. Does anyone have any questions on that?
So in the entirety, from the beginning, we had the tax exempt is for the new construction primarily.
Yes, primarily the new construction is is the bulk of the tax exempt portion. There are also some internal renovation projects scattered across the campus, various medical facilities, and the Memorial Art Gallery that will also be part of the tax exempt portion of the bond issuance. In addition, the taxable issuance is going primarily to refund outstanding bonds issued by the New York State Dormitory Authority. The current par amount is projected at $430 million. So, roughly in the middle of our up to 700, a little higher than our up to $700 million. But given the market, it didn't make sense for the university to partially redeem some of the 2015 bonds. The interest rates were just not significant enough to yield savings that made sense. So the taxable series will take out 2003 and 2006 DASNY bonds.
And then our amendment is just to say a portion of those proceeds can be used for working capital of,
Yes. Yep.
of the entity.
Correct.
Again,
Robin,
Rachel,
I have a question. How long will that, or Rachel, I was just wondering, how long is that working capital going to last? Is it 6 months, 1 year?
It's on the taxable side, so they don't, unlike on the tax exempt side, there aren't requirements of a specific drawdown period. The taxable, I'd have to look at the sizing to see the maturity date on the taxable side. which I can pull up. It doesn't, I want to say it's a tenure put on the taxable side. But I don't have that answer off the top of my head.
Rachel, this is Joe Rizzo.
Yep.
Rachel, this is Joe Rizzo. I had just a broader question. With having a portion of this with the project change and the 25 million for working capital, are there any drawbacks to having a portion for working capital or not in this situation or for future projects?
There are not. I would note that it would not be permitted to be tax exempt bond proceeds that could be used for working capital. That's not an eligible use of the tax exempt series. So this is similar to taxable bonds are akin to a bank loan in most ways, but for the fact they're issued by a conduit issuer like MCIDC. So for MCIDC and for the university, no, there's no drawback.
So Joe, the
Thank you.
drawback would be, I think the drawback would be if you're with a lender that you have a $25 million evergreen line of credit, regardless of how it's structured to be a bond. But with the U of R and its credit, I wouldn't worry about it if I was the lender.
Yep, just kind of a general question. Thanks so much.
Other questions for Rachel?
There's no action on this. This is just a report, right?
We are asking for a motion, and Peter, if you want to go ahead and ask for that motion.
Yes, there is the amendment there on the use of proceeds. So I am seeking a motion to approve that amendment as we've discussed.
I'll move that. Phil Smith.
Thank
I'll
you, Phil.
second that.
Thank you, Peter. All in favor?
Aye.
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 Any opposed? The motion carries. Anna, good morning. We have a topic for you to lead us through here, which is interesting. We had a little discussion here prior to the meeting on this. So Anna, if you'll take us through a pay equity policy. This is something we're not going to take action on today. It's a conceptual idea. And Anna, I'll let you go from there.
Thank you, Peter. Early on before COVID, when I first joined the county executives administration, we had a series of meetings with the local Rochester Pay Equity Coalition. It's a group that is encouraging and advocating for robust adoption of, so the laws on the books dictate that if you're a business and you're employing, if you have people in your employ, you must be paying your workers equal wages and salaries for equal work. And the state of New York has some of the most stringent policies on the books in the United States. I think we're just behind in the eyes of the advocates. We're just behind California and the state of Washington in terms of our state laws governing equal pay. In 2015, the Erie County Industrial Development Agency adopted a pay equity policy, which is applicable to all who apply for and receive incentive benefits before that agency. And it requires that any applicant must be in compliance with all state and federal laws governing equal pay for women and men for the same job position. And if an applicant or an incentive recipient in Erie County is found not to be in compliance, incentives may be denied, terminated, or recaptured, subject to that board's discretion. And County Executive Bello has asked me to float this idea with the MCIDC board and with the board of your sister entity, Comida, to see if this is something that would be of interest to adopt on our end. And the county executive also plans to issue an executive order mandating that any business that wishes to work with Monroe County, whether it be in a procurement or other manner, also be in compliance with state and federal equal pay laws. In Erie County, there's a unique structure whereby the ECIDA and the county audits businesses to ensure that they're in compliance. They use a computerized process where they randomly select 12 businesses per year that are recipients of incentive benefits, and they work with those companies to ask for certain documentation to see that they're in compliance. And then again, as I mentioned, it's subject to board discretion whether any incentives are recaptured if a business is found to not be in compliance. County Executive Bello and his administration are working right now to institute an equity and diversity and equal employment office. They're working to hire an equal employment officer. And it's our understanding at this juncture that the county executive's team under that division would take the responsibility of interfacing with businesses to ensure that they're in compliance. We're asking that we discuss this concept and potentially depending on how palatable it is to the board, we may wish to adopt it later on this year or at a future meeting such that it's applicable in 2021 to applicants. And with that, I open it up to your questions.
If I might, if I can move along, we did have a governance committee. Zach,
joining the meeting.
Hi, who just joined?
It's Chris. I'm sorry, I just got disconnected.
Oh.
Okay.
Okay. We did just prior to this meeting have a governance committee on this topic. Zach, if you just wanted to walk us through that, and then I think we would welcome questions and discussion.
Yeah. We had a good discussion about it. I think just a couple of the procedural, how it would actually work, who would actually do the reporting, and who would compare the reports. That was the main issue, I think. But besides that, I think we all liked it in concept, and yeah, that's, I think, was a part of our meeting. Peter?
Thank you, Zach. So in your packet is a rough draft, and I think it does merit some discussion. So please, if anyone has thoughts, please share.
Can I ask a question? I know job creation. Go ahead, Phil.
Go ahead. No, you go ahead.
I was just going to ask. I know that job creation is in our charter. Is something like this also in our charter? I know when it's construction, we have to make sure we have the proper labor. But I'm just wondering, is this concept allowed in our charter, and would it discourage companies from applying if they are going to be under this scrutiny?
So actually, local, this is Rachel.
Which is a good thing.
Neither our mission nor our bylaws or any of the applicable charters of our committees contain a number of the policies that we have. They aren't required to. This is just a policy that we are looking to implement similar but different from local labor, but again, it not contained within our organizational documents.
I think it's more of a move in the right direction, and if it discourages people from applying, then hopefully it's a really good policy.
This is Ella. One thing that I wanted to bring up to add on to Zach's comments about some of the issues that we discussed when the governance committee reviewed this was that this is just a pretty rough draft, and the actual, like, the mechanics of how MCIDC staff would actually perform the audit, you know, and who they'd rely upon for, you know, the expertise to do that audit is going to be flushed out in greater detail and added to this policy at some point. And also, you know, staff will make a recommendation to the board, and then the board will have, you know, the ability to retain an expert to assist it in making its determination. So that gave me comfort, because, you know, I think this is a step in the right direction, don't get me wrong, but I also think that it you know, is another element where the board has some liability, because if we are going to then tell an applicant that they are not complying with equal pay laws, that exposes the board to some additional liability. So I just want to make sure that the board is protected, and that we have the experts or the assistance that we need to assess whether a company is complying with these laws. Because, like I said during the governance meeting, it's not as simple as, you know, being able to check whether someone is using local labor or not. It's a complicated process.
So this is Rachel. I guess I would want to flesh out in a future discussion what that potential liability against the board might be.
No, I'm just saying, Rachel, you know, when the board acts, and if the board, because the way it's worded right now, if staff has reason to believe that a company is not paying its employees equally, then it's going to refer the matter to MCIDC to the board for action, and then the board will either, you know, the board will then decide to, I guess, could potentially revoke the funding that has been provided.
Sure. So, and again, we can flesh this out more. You know, as you know, any challenge to a board's action would be an Article 78 proceeding, and the standard there of review is that the board acted arbitrarily and capriciously in its determination that a company was in violation of X, Y, and Z, and then it took its recourse. And you know, to say that a board acted arbitrarily and capriciously with respect to a company in violation of equal pay laws, and it would be a hard standard to challenge.
So who enforces these laws now?
New York State.
Do they do it, or I don't know?
Yes. So it's up to employees, workers to advocate for themselves and file complaints. So there's no this New York State Department of Labor, to my knowledge, doesn't have a cadre of auditors that goes out and monitors this stuff. It's got to do, it's self-reported. Employees are legally permitted to ask colleagues, you know, what they earn, and if they find that if they believe that they are being unduly discriminated against in terms of their pay, they can lodge a complaint, and that initiates a more detailed and robust process with the DOL as to how they monitor it. I can get more information. I have a contact over there that can provide us with some information. Lydia also knows somebody at Erie County who's on the team there that monitors compliance.
And Harris Beach also represents Erie County IDA and IDC, so we can talk from a legal perspective. I can talk to my colleague, Bob Murray, about how in practice this plays out.
This is Joe Rizzo. Go ahead, Phil.
No, you go, Joe.
I had a question here, and I'm glad that this was brought up about the liability, exposure here and so forth. Is that what I think I heard Rachel you say is that if we could learn more about other areas, you talk about Erie County, for example, or other areas from how New York State enforces this, so we can learn about, what are the things in terms of implications and complications and dispute resolution. It all needs to be laid out very, very carefully and being very articulate, so we don't end up getting kind of caught up and hung up on trying to move things through here from a board and an MCIDC perspective. I think I agree with what folks said. I think we're moving in the right direction here with this policy, but we have to be very prudent and careful on how we evaluate it, lay it out, steps to procedural steps, and if there are dispute resolution issues, how we manage through those effectively and efficiently.
Well said, Joe. Any other discussion?
I just wanted to know what's going to be like next step for this, Anna, in terms of is it going to be more detail underneath these, or what is your thinking for following up from this conversation this morning?
So August 10th, I believe, is Black Women's Equal Pay Day in the United States, and there may be an announcement. I think it's likely that there may be an announcement coming forth from the county executive in the form of an executive order mandating that any company that wishes to do business with Monroe County must operate in accordance with this policy. And he, at that time, may announce, and this is all subject to conversations happening in the near term, announce that he's asking COMETA and MCIDC to adopt the same policy. It's identical for the most part to what has been implemented in Erie County. Erie County Executive Mark Poloncarz instituted this executive order in 2014, and then in 2015, ECIDA adopted the policy. So, so essentially, stay tuned. I'm thinking that we will bring this up for discussion and potentially for a vote, not necessarily next month, but maybe into the fall for 2021 adoption. So that's why I wanted to ensure that it was on your radar and floated for discussion sooner rather than later.
Thank you.
Well, very good. Thank you, everybody, for the discussions. There's certainly more to come.
Mm-hmm.
If I can move along here, we do have some confidential financial information of loan applicants to discuss. I would need a motion to enter into executive session.
So move.
Thank you. Any for a second?
Second, Joe Rizzo.
Thank you, Joe. do we need to disconnect, Robin? Or?
Yes, just give us 30 seconds.